Hello traders, this is Sniper from Sniper Trades, and I will be demonstrating today all the things you need to know about peak formations and how to use them for your session and daily bias. Peak formations are the high and low of the day, as well as the high and low of the previous day. They are peak formations that are formed during the session. And what are peak formations? They're quite simply engulfments and pin hammers at the high and low of the day. They can also be M and W formations, can be false breaks at the previous day's high and low. That starts our day count, day 1, day 2, day 3. They are also where profitable trades exist. Peak formations are where 3 levels of rise can be measured. And peak formations, again, are made in the sessions themselves. Peak formations lock in a price level, and peak formations pretty much tell me everything I need to know whether I should be buying or selling this market. So today I'll be demonstrating everything you need to know about peak formations and how to use them. Yes, these are Stacey Burke's concepts that I am demonstrating. And just before I start this video, if you have not bought Stacey Burke's playbook, I highly suggest that you go to the link in the description and purchase the playbook before you start doing any studying, analysis, any sorts of that nature for using Stacey Burke's concepts. Please purchase his playbook. There are a lot of people rewriting the playbook, which I strongly believe that there's no need to. But on to the video. Peak formations are made during the sessions themselves. I use a session indicator to identify my Asia, London, and New York highs and lows. So what is a peak formation? So starting from Monday, if I start from the Asian session, not regarding what Friday has done, I will go to that in a second. But we have a high put in place in the Asian session, and we have a low put in place in the Asian session. As of right now, I don't know if this is my exact high or low of the day, but when they've broken out in the gap time, what that told me and what that's telling me is that the low is not put in place. We have a previous day's level intact. They broke below the previous day's level and reversed. Now remember what I said earlier in the video with our peak formations, engulfments and pin hammers at the high and low of the day. They can also be M's and W's of that such nature, and they're also where profitable trades exist. So if anyone went short in the London session at the low of the day, low of the week, they're currently in profit. So if you use that theory here, we have a 3-bar formation here, 3-bar reversal formation. This is a peak formation. So this peak formation was put in place for the bias for sellers to continue this low-hanging fruit. We have our peak formation high and our peak formation low. Later on to the day, they expand the range of the Asian session, which I will draw chart formations here just to show that these are lower peak formation highs here. So if my peak formation is down, I'm looking to long this market. If my peak formations are up, I'm looking to short this market. Now, how can I actually use these peak formations? You're probably asking that question, and here today I'm going to show you what are peak formations and how to use them. Peak formations are simply just highs and lows of the day made during the session. This is very important to reiterate. They're made during the session. So peak formations are engulfments at the high and low of the day, M's, head and shoulders, those type of formations formed during the session and indicate who's in profit for that session. So if I'm going to be focusing on peak formations, I need to focus on simply the high and low of the day at all times. When the New York market opens at 8 a.m. New York Eastern Standard Time, we're inside this high and low boundary. At one point, this was my peak formation high, which they have broken and expanded that range in the gap time prior to the New York session open. I do have a high put in place here, which technically is a peak formation high, a lower peak formation high from the peak formation high from Friday's session. So just to show, peak formation high, peak formation high, peak formation high, peak formation low. Now, how to use a peak formation is, for one, the number one rule is to never counter trend a peak formation. What does that mean? When they put a peak formation in place, you don't necessarily want to counter trend that peak formation unless an opposing peak formation is put in place and they work into that peak formation low to confirm that they're locking in that level. So here I will demonstrate on our Monday we have a high in the Asian session, a low in the London session, and they're not going any lower. These attempts to go lower are failing. We have a higher high on the inside, which if you study Stacey Burke's concepts, that is the indicator for a dump and pump. The market dumps before the market open, pumps, gives another higher high. And if I take a look at the New York Open, which opens here 9:30, was a stop hunt on anyone who has longed this market early in the first hour to attempt to shake them out, maybe even put them at break even before they continue this move back toward the peak formation highs from Friday. Now I'm using the highest bull and the lowest bear as levels of support and resistance. A lot of times they can break inside of this peak formation to hit the stops at the high of the day, high of the week, to further confirm that stops may have been hit, to either break out, pull back and continue, or put a new peak formation in place to continue the move back down. As I will further reiterate in further videos, I will demonstrate how peak formations can be used to identify the best 3-session and 3-day templates for pump and dump and pump opportunities. But for today's video, I would simply be demonstrating peak formations, how to identify them and how to use them. So we have a peak formation low on our Monday, a peak formation high on our Friday. As of right now, we are inside of this peak formation high and this peak formation low. I need them to either work into these lows for the move up as demonstrated on Monday, and or work into these highs for the move down as demonstrated on our Tuesday. We have a lower low on the inside, which is our recipe for the pump and dump template. This offered a nice 3-session pump and dump template, a pump and consolidation, a lower low on the inside for a return back where? To the peak formation high. When the market puts in a peak formation, you simply do not want to counter trend that peak formation unless you have evidence to do so. What is the evidence? A breakout pullback continuation, or maybe a marginal new high. So, which means they will come up hitting the stops on Asian shorts, possibly consolidating up here, coiling for the continuation long, either or. Point of the matter is, when there's peak formations put in place, peak formation high, peak formation low in the Asian session, they gave us a high and low boundary. We're looking for them to work one of those sides for the move up or the move down. This was a 3-push pattern down into the low, peak formation low, end of day consolidation here, What is the end of day consolidation? It's quite literally just the last consolidation of the day. They worked into this in 3 pushes, 1 push, 2 push, 3 pushes, and they continued to march back up and 1 push, 2 push, 3 pushes. We get our engulfment of the high bull structure and our continuation back down to these lows in the New York session, and even possibly the low bear, where there was active longs in the market that have not been stopped out yet. So peak formations are simply literally just that. As you can see, I'm drawing peaks every time I get a new peak formed. Peak formation low in place. Whatever the peak formation is put in place, you simply do not want to counter trend that unless you get evidence that it is a reversal, or maybe even a breakout pullback trend scenario. So this would be your peak formation high heading into the end of day consolidation. This would be your peak formation low heading into the end of day consolidation, which I'm stuck in between 2 peak formations, which I'm waiting for them to hit stops to show me their hand and to show me what they're going to, where they're going to move the market. So peak formations, which I will do along with structure. This is a breakout pullback continuation, pullback continuation, pullback. They hit the stops of these lower highs here, which shifts the money back to the low of the session, low of the day, for the New York Open to collapse. For the low-hanging fruit opportunity, this market is significantly broken down, so you can look for the trend continuation back down to the low of the week around our New York Open to confirm the thesis of the breakout pullback trend continuation. But further developing into this week, I would just simply mark off where the peak formations are. We have a peak formation high put in the London session, confirmed when they broke out of this market, which is telling us what? That the peak formation low is still being put in place. So as of right now, this market will be putting in peak formation highs, which are made during the session to continue the trend back up or down. They put in a peak formation low at the end of the US session, which is evidence that they might be having a change of direction here if given the behavior of price. We head into the end of the day, which this is our end of day consolidation. We're just simply waiting for evidence for whether a breakout pullback continuation, a breakout fail and reversal, or just a trading range. Peak formation high, peak formation low is the indication for the day 0 template, which is what we got here. We have a higher high from the New York session, and again, I will further explain these in later videos. Higher high on the inside is a recipe for the dump and pump template. We have our dump, higher high, consolidation, coil, pump. And again, just to reiterate, we have a peak formation low in the Asian session for that day. For this day, they put in a high in place, which oftentimes this high will not be put in place because it was formed in the gap time, and they can easily break higher. And if they're breaking higher, all that's telling us is that the peak formation high is not put in place yet. So which means they will go higher and higher until they do. The London session pulls back, consolidates, builds volume, and also gives us higher highs on the inside, which is the recipe for the dump and pump template. They put in a peak formation low here to continue the trend. So remember, what are peak formations? They're simply just highs and lows of the day, engulfments and pin hammers at the high and low of the day. They're highs and lows made during the session, and they're also where profitable trades exist. So these buyers from the New York session close are in profit, and they stayed in profit for the majority of the next day to the close. So I don't want to keep this video very long. I want to keep it short and simple, short and sweet. That is what a peak formation is. Peak formations are simply just highs and lows of the day, which they also lock in a number level. So if I put my numbers on the chart, this peak formation here locked in our quarter level at 75. This peak formation here locked in our 50 level. So those are the levels that we will be working from. This peak formation here locked in double zeros, which I will be looking for a fill at or above double zeros. And as you can see, they've came back into this 50 level and continued the trend back up. We have a peak formation put in place at our quarter level, which they've given us a next best fill price at double zeros for the continuation. And if you waited for the New York session, they've broken out, pulled back. We have a consolidation here beneath the 50 level, which I will demonstrate these concepts in later videos. The 50 pip box, the 100 pip box. We've broken out, pulled back, and continued off of 50. So these peak formations, well, this peak formation has locked in the quarter level, which has given an opportunity off of the double zeros and the 50 for the continuation long. So peak formations quite simply lock in a level. If I go to this low hanging fruit here, or if I go to today's price action, for the session itself, they put in a peak formation low below 50. So peak formations lock in a level. They're locking in 50. They approach and they put in a high at the quarter level at 25, which they could potentially be locking in 25. So I'll be looking to, if I was to short this market, to get in above 25 or at 25 for a best fill, maybe back down to these lows, or maybe where the pump started for a nice 25-50 pip scalp on gold. And if I go back, if I was to go back, or let's just say here, here, if I cut this and go to the New York session, the day prior, we have a peak formation locking in the double zeros possibly. So double zeros has been locked in. They're making lower peak formation lows. We have our low of the day. We have our high of the day in the A's in session. We also simply have a high at the beginning of the day, which means that our peak formation is at 50, peak formation highs at 50, and our peak formation lows at zeros. They lock in zeros for the move back up. They lock in 50 for the move back down. Why are these number levels so important? They're quite simply just giving me a reference point to get into the market. So if I go to the 1 minute time frame, this was an excellent trade that I went over during my live trading mentorship. I had a few members execute this trade perfectly. We have our pump, which our high of this session is potentially locking in the quarter level 25. So best fill will be to get in at or above 25, which the entry was right around here, 15 minutes after the New York Open, for the capitulation back down 100, 150 pips This trade was over in about 15 to 30 minutes. And again, I will further demonstrate these concepts, but just to reiterate the point that peak formations give you a session bias, they also give you a daily and weekly bias. So these same concepts can be applied every session, every day, and every week. So again, peak formations, what are they? They can also start a day count. If I put my previous day high and low indicator on, the false break at the high of the week is also a peak formation, which means do not counter trend. This could start our day count. Day 2 can often continue the trend, and day 3 can also blow off in a trend or give a parabolic reversal trade. So if I just scroll, we have a peak formation high on our Wednesday, confirmed on our Thursday with the break of this previous day's low, our day 2 of the 3-day cycle, to further continue the trend off of closing price, lower lows in the market. This is a low-hanging fruit trade, a trend trade. We have our peak formation in place, and they put in a new peak formation high for the continuation back down. After the low was put in place, they worked into these lows, lower low, they pulled back, worked into the highs for the continuation back down. Simple trading. This may seem confusing at first, but after a while, once you see it, you cannot unsee it. Do not counter trend the peak formation. And again, this is Sniper at Sniper Trades, demonstrating everything you need to know about peak formations. As you can see, it's quite simple. It's not rocket science. You're quite literally just paying attention to the high and low of the day, which are formed during the sessions, and the previous day's high and low, which are peak formations made during a session. And you're just quite simply observing the behavior of price for a session bias and a daily bias, for whether it's a pump and dump or a dump and pump trade setup, whether that's over 3 sessions, 3 days, or the session itself. So thanks again at Sniper Trades, and I will see you guys in the next video.